How cheap are value stocks? Asked Larry Swedroe. So let's take a look. Pretty interesting. Dateline of 3 weeks ago, but 11/22/21. Listen, I haven't read this yet. So interesting. We're going to read it together. I'm a fan of Larry. I'm a fan of value stocks, and I'm a fan of the word cheap. So that's a 3 for 3. So let's see what we got. Despite the strong recovery for value stocks since late 2020, they are still priced at historically cheap levels compared to their level at the peak of the tech bubble. Let's take a look what VTV is doing right now, shall we? So we're going to look at VTV, and that's my biggest holding, just as an FYI. By far and away, my biggest holding is VTV. It's at 144. So in the last, so going back to January 1st of 2020 is at 116. Now it's at 144, and that does include dividends reinvested, and then the price going down because of dividends. So basically, that is including dividends. So we're up 116 to 144. I don't have my dude. So 116 to 144. So we take 144 minus 116 divided by 116. So it's up 24% a year. Well, that's good. That's not. I wouldn't say that's extraordinary, and that's over almost 3 years. 2 years. So that's January 1st, 2020 till right now. I mean, that's good. We'll take it, but it's not like that's not a 54% increase. So let's look at VUG. That's the Vanguard Growth and ETF. Let's see what that was. Well, that's January 1st, 2020 was at 187. Now it's at 310. 310 minus 180, 310 minus 187 divided by 187. That's up 65%. Almost triple that of the VTV. It's crazy. So if you look at 2000, we'll just start with 2010. January 2, let's see, we'll start with 2010. January 2010, VUG was at 50. All right, so 322 minus 50 divided by 50. It's up 5.44 times, 544%. All right, so then we go to VTV. VTV. And that in January 2010 was at 46, and now it's at 144. So 144 minus 46 divided by 144. What did I say? 144 minus 46 divided by 46, excuse me. It's up 2.13 times. That's interesting. All right. For the period of 1927 to 2020, the U.S. Small Value Research returned 13.9%, outperforming large growth research by which returned 9.9 by 4 percentage points a year. Yes, this outperformance led many investors to tilt their portfolio to small value stocks. I completely agree. I think it's a huge mistake. However, over the 23 period from 1998 to 2020, U.S. small value stocks have been disappointing. As a U.S. small value research was up 9.7 versus 9.9 for the U.S. large growth. Okay, that's interesting. But I've talked about this 1,000 times a Sunday. The reason the small cap value stocks are outperforming is because they had that 4-year interlude where they just destroyed everything else. Nothing came close. You take away that 4 years, even Steven. So I didn't even know I was going to go down this direction, but there you go. I'm just reading it. We're reading it together. But that 13.9 versus 9.9 says let's have a tilt to small cap value. You take away those 4 years, or maybe 6 years, it's even Steven. Small cap value stocks began a dramatic recovery late in 2020. Using the last 12 months, they have returned 87.9%. Wow, versus the 27% of the large cap growth. All right. Let's see. With that said, using He's talking about the Bridgeway Omni Small Cap Value Fund has outperformed. Okay, so he's talking about small cap values have outperformed the large growth in the last year. All right, that's great. However, during the last 5 and 10 years, large cap growth has smoked a small cap value. All right. With that said, though, small cap valuation relative to the market indicates that small cap value stocks are still trading at historically cheap levels. Using Morningstar data, a small cap value fund had a PE of just 9.3. At the end of 2013, had a PE of 11. The small cap value stocks are trading cheaper today than they were back in 2013. Was that small cap value, or how many holdings are in this guy? I don't know. So let's, he's talking about this one fund specifically. So let's look at Vanguard. Hold on a second. Let's look at Vanguard. All right, here's the small cap value fund he's referring to. How many holdings does it have? So let's take a look here. Yeah, it's got 655. Okay, so it's pretty diversified. Okay, good. So that's good. So it is definitely, I think, reflective of the small cap value area overall. But let's look at Vanguard small cap value ETF. Actually, I don't even know if it shows a PE on this thing. Hold on just a second. Yeah, 13.9. All right, well, there you go. So that's not so bad. That's interesting. I didn't realize the PE ratios are so low. Huh. Let's look at VTV, shall we? PE ratio here is 17.73, and that's as of 10/31. And let's look at VUG. That doesn't sound like it's over the top, man. 36. Once again, I don't know how you look at growth and not say, eesh. All right, so for example, in 2013, S&P earnings were about 105, and the index closed at 1782 with a PE of 17. The current year earnings are about 205, and the S&P is trading at 4,700 with a PE about 23. That's high, but it's not extraordinarily high. And the bulk of that, of course, is going to be on what? On the growth side, not the value side. We just showed you the value side is well under, more than a half, more than the growth is more than twice the PE of the S&P of the value stocks. So of that PE ratio of the S&P at 23 at record highs, that primarily because of the growth stocks. Huh. Right. Valuation spreads at historic highs. Thanks to the team at AQR, which I'm a big fan. We can examine how the current spread between value and growth stocks compare to historical spreads. They include 5 measures: price to books, price to earnings, forecast earnings price, sales to enterprise, cash flow. Okay. Let's see. AQR examined the current percentile ranking for large stocks and found that both in U.S. and emerging markets, value stocks are trading at the 100th percentile. In other words, despite their strong recovery that began in the late 2020, value stocks around the globe are trading as cheap as they have since 1984 relative to growth stocks. Wow. I like AQR, by the way. They found that the valuations implied that the earnings of developed market growth stocks would be about 80 percentage points higher than those of value stocks, despite analyst forecasts only 20 percentage points more for growth. Yeah. That's interesting. In terms of the actual realized spread in earnings growth, there's about 20 percentage points for both developed and emerging markets. Keep in mind the historic cheapness of value stocks relative to growth stocks. AQR then examined the information content, the valuation spread. They found that over the period of July 1950 through December 2020, the correlation of value premium to the valuation spread was 0.89. I don't know what that means. Anyway, so an interesting example. Okay, let's see. With this in mind, we can examine how the value premium performed after the previous peak in valuations using the French data. From 2000 to 2006, the French data value research returned a cumulative 140% versus the growth stocks, which are down to -8. Yeah. Despite I completely agree. With the valuation spread between value and growth stocks at levels comparable to spread at the height of the tech bubble, the evidence argues that value premiums at a historical high, and investors should expect a repeat performance that we experienced through 2000, 2006, which is when Wellesley and Wellington and value stocks, dividend stocks in particular, just smoked it. So I agree with that 100%. I could be wrong, but if you just look at historical metrics, PE, dividend yields, it's right there. It's just when, I don't know, but it seems pretty obvious to me. Value stocks are the wave of the future. especially if you're getting ready to retire. I'd love your thoughts. We'll see you.